In this video, we'll explain why we've decided to increase our holdings in Tesla shares. If you want to see more Tesla videos in the future, subscribe now. For Tesla, this month holds 3 significant long-term catalysts. 1. As of the first quarter of 2023, the Model I has become the best-selling automobile in the world. Model I's price tag is over twice as high as that of other top 5 cars like the Toyota Corolla, which is a huge endorsement of the model's high value and desirability. I see this as a turning point where never again in human history an ICE car will be the best-selling car in the world. Either Tesla sales will continue trending upwards, or ICE car sales, like those from Toyota, will continue trending downwards. I'm rooting for more electric vehicle sales, not just from Tesla, but from other manufacturers like BYD in the next few quarters. 2. Ford just made a groundbreaking announcement that all their future EVs will start transitioning to the North American charging standard pioneered by Tesla, which allows Dell EVs to be compatible with all Tesla supercharger stations in the US. This was received really well by the market. Fallout was up by 6%, and Tesla stock was up by 5% yesterday. We bought Tesla stock before market open, using a feature on Interactive Brokers called outside regular trading hours. This is a great feature by some brokerages, which is very useful, especially when major announcements are made outside of market hours. This news paves the way for other car companies to also transition from CCS to the North American charging standard, which is better for consumers. It is lighter and easier to use actually in North America right now. 70% of all EVs are already using the North America charging standard because they're Teslas. And 85% of the public EV charging network are a North American charging standard. Because the supercharger network is expanding rapidly, it's already the fact of standard in North America. Once Ford opens up, other automakers like Rivian and many others may start partnering with Tesla on opening up their EVs for superchargers. And this collaboration could eventually extend the reach of Tesla's supercharger network. Third, Tesla has begun construction on its first ever in-house lithium refinery, and Elon Musk has reiterated in a recent interview that Tesla will announce the location of its second gigafactory for the next generation vehicle by year's end. Elon Musk has said on multiple occasions that lithium refining, not raw materials, is the bottleneck to Tesla's production growth, and that these strategic moves are laying the groundwork for long-term success as the economy begins to expand beginning in 2024. I also see early FSD beta test vehicles in Australia and Europe, which is encouraging for the future of FSD beta. According to a recent survey, 68% of respondents who are long-term investors plan to increase their Tesla stock purchases this year, in anticipation of the company's global expansion hardware for rollout in Model I and the upcoming Model 3 refresh in the United States. I'm wondering if there are any other potential triggers for Tesla. Some may think Tesla's stock has had a great run and is overvalued at 38 PA, but as you've seen in recent times, companies like Nvidia have delivered 3 times higher returns than Tesla for investors over the past decade. Nvidia's PE ratio is 221, while Tesla's is 38 PE. That tells me there has been some serious expansion. Almost no one predicted that Tesla would have the best-selling car in the world 5 years ago. Today, almost no one predicts that Tesla is an AI company. Question we should be asking as long-term investors is, what would the world see in 5 years if you'd like to start investing in Tesla stock? If you think the company has a chance to grow its stock price, then invest wisely.